Welcome to today's Corporate Venturing Insider series. Today I'm very excited to have Bobby Franklin from NVCA. Bobby, welcome.
Thanks for having me. It's great to be here.
I know it's going to be great, but let's start with you, Bobby. Can you tell us your journey into venture capital? And what's interesting is that I also come from the wireless business. I know you're in CTIA, so we didn't have the obvious journey into venture capital. So please tell me.
Well, let's see. I'll try to make it's almost 40 years now quick. I grew up in Arkansas. I went to the University of Arkansas, got a finance degree, thought I was going to Wall Street, and in the meantime, got offered after I graduated a 6-week internship at Capitol Hill here in Washington, D.C. And so I came to Washington, and as a lot of stories go for people that come to Washington, I came here for 6 weeks and I still haven't left. So I worked on Capitol Hill doing public policy for a senator from my home state. He retired. I got out and did what a lot of former Hill staff do, become a lobbyist. And I worked in telecom for a company also headquartered in my home state, which was Alltel. And I was their lobbyist, and then I ran their DC office, and that sort of got me engaged in the Wireless Industry Trade Association. And so at some point, they got a new CEO, and that CEO basically recruited me away from Alltel, and I went to work there first as their head lobbyist and then as their number two. And after 8 years of that, I got a call one day from a headhunter, and they said, NVCA. I said, what's that? I've never heard of it. And the more they explained it and described it, and they said, look, we're looking for somebody that knows how to lobby and impact public policy. We're looking for somebody that has some trade association management experience. It was just a unique thing. And we'd love it if you also had venture capital in your background. And I said, well, I have a finance degree, so I know what you're talking about. And ended up getting the job. And that was back in 2013. So here I am.
Very nice. Can you share what the NVCA is about and maybe some of your recent success?
Sure. So NVCA has been around since 1973. We celebrated our 50-year anniversary just a few years ago. And it really started what I would call the birth of the modern day industry started, which was in the 70s. There had certainly been what people could look back and say there was venture investing before then, but a couple of things happened. Some of the early investors in the 70s came to Washington, and there were two issues that were primary functions to really make the venture industry what it is. And those early pioneers came here and they lobbied for one thing, which was to lower the capital gains tax rate, which at the time was very high. And they lobbied for a change in the ERISA rules, which then allowed pension funds to be investors in alternative assets. And most people look at those two happenings in the 70s as when venture really started to take off. More capital was formed, more check writers started deploying that capital, and more entrepreneurs were able to take the risks that they do to try to create something big and amazing. And when we look back and think about all the different policies that have been debated since then, NVCA has a multi-decade kind of history of success. It doesn't mean we win everything, nobody does. But there are so many points along the way where there were significant policies that would have harmed the entrepreneurial ecosystem. One that pops to mind and often give as an example is back in 2017, there was a tax bill that was moving through, and policymakers thought it would be a great idea to change the taxation of stock options to when they were vested versus when they were exercised. And if you think about all of the entrepreneurs and all the people that work at startups who don't take salaries, instead take equity positions, they would have had a massive tax bill just because they had worked at a startup for a while and became vested in their stock options with no ability to pay a tax bill. And oh, by the way, as we know, one study we often cite is that over a 10-year period, 75% of all venture investments fail. So you would have had people working diligently in the entrepreneurial ecosystem that would have had a massive tax bill. And in this case, 3/4 of them wouldn't have had anything at the end of the day for the government to justify having charged them that tax. So that's an example of where we have to jump in, wave our hands, and go, whoa, whoa, you don't understand the detriment you're going to cause to something that is so vitally important to our country and, frankly, to the world.
And I think the example you give about pension funds being able to invest, not every countries have done that. And I'm guessing this is one of the major inflection point for the US venture capital economy.
It is. And I think that's a great example of why the US continues to, I would say, maintain its market share lead with regard to venture dollars being invested in a country. I think another one that I noticed and learned more about in these last 14 years I've been here is that there is a certain acceptance of failure in the United States, which is just one step closer to success. And you go back and look at all the famous entrepreneurs, and they can tell you about all the failures they had before they really hit the idea that ended up being so successful. And a lot of cultures around the world don't have that. And if there's failure, gosh, people can lose their passports. They can go to jail. There's all sorts of bad things happen to entrepreneurs. And so that really, for large parts of the globe, restricts the entrepreneurial activity that they have. And so that and good policies and other things, I think, help explain why the U.S. invented the idea of venture capital investing and continues to dominate.
Actually, it's interesting. In French, it's called capital risk capital. But it doesn't feel like in Europe, and maybe you can help me here, it doesn't feel like the risk appetite is the same as in the US.
I think that's right. And I used to talk about back in 2013 when I started, I used to tell policymakers, you have to understand how the rest of the world is getting off planes, Silicon Valley and other parts of the US, and they're observing what we're doing well. And they're going back to their countries and they're trying to mimic it. And the market share of venture dollars in the US was once 80 or 90%. And then in the 2013, 2014, it had gone down to, we were less than half at one point because other countries did figure out what you need to do. But it's a reflection for each country to, I think, look in the mirror and say, what are we doing right? What are we doing wrong? And by the way, that NVCA exists because the US does a lot of things wrong. And we are here to point out when they do things wrong and try to get them to do things right.
And maybe we'll talk about that. But I want to shift gear towards corporate venturing. So the audience are people in corporate venturings, maybe in corporate VCs, or thinking about starting a corporate VC. And we've seen so much more alignment in the last 10 years between VCs and CVCs. You even have more and more engagement with NVCA and corporate VCs. Can you speak to the last 10 years and how you are optimist, I know, about the stage today, and maybe we'll talk about the future afterwards.
Sure. Well, if I look at our data as PitchBook data, but if I look at our data and go back to 2015, if you looked at all deals, corporate venture was 53.6% of deal value back in 2015. And if you look at last year, that's climbed to 63.4% of deal value that CVCs have been part of. CVCs now participate in 1 in 6 startup funding rounds. So they're ever present. 3/4 of the deal value go to Series B or later. 2/3 of the deal count goes to seed or Series A. And obviously, talking about value in later stage versus the number of deals makes sense to those that understand the space. So it's really demonstrating in mass sophisticated investor behavior, and thinking about all stages of investment. VCs provide agility. CVCs offer the kind of mothership resources for scaling, and so much that's important to a young startup. If you look at AI, which is obviously the investment du jour. CVCs committed 82% of their dollars to AI investments and participated in 68% of all AI deals. So those are just some stats to show what's happened over the last decade. And it's impressive.
And I think you hinted to it, but there is value from the mothership. How do you see that becoming? I mean, when we talk about AI, I mean, we think about OpenAI and all these companies.
Yeah,
Corporate venturing has been core to them being catalyzed to success.
absolutely. Think about what Microsoft did all the way when OpenAI was before we started talking about Chat GPT and stuff, right? It's such a, I think, real success story showing the value and the important role that established companies continue to play in what I always refer to as the entrepreneurial ecosystem and the next great thing.
So there are some entrepreneurs watching these interviews. If you were to make the argument for them, why include corporate VCs in your cap table? Why not? Because clearly, not all corporate VCs are born the same,
Right.
and some are good and some are not so good. So, what argument would you make to the entrepreneurs?
I think to the entrepreneurs, and every entrepreneur depends on kind of what your space is. When you look at the data that I just shared over the last 10 years, clearly so many entrepreneurs and founders have found value by having CVCs on their cap table for a variety of reasons, right? And that success rate and that increased participation would not happen if folks were saying that this doesn't help me. And so I think the data speaks for itself. And I think that the data shows that it continues to be successful.
Exactly. I was getting to that, which is how do you see corporate VCs in the M&A context as, on one hand, they are clearly a good path for entrepreneurs to think about corporate VCs, but at the same time, they might be worried it comes with hooks and it could be dangerous to have a corporate VC on your cap table because of what it could imply or at least signal. How do you think about that?
Well, you see a lot of portfolio companies that have more than one CVC on the cap table, so that can help create some balance there. And I know that there have been examples, and I'm sure some lore around folks that wish they didn't have a certain CVC on the cap table because of what you're describing. They wanted greater rights and so forth. I think with the increased participation that we've seen over the last decade, I think more people are aware of some of those challenges. And I think they're better able to navigate that. So I feel like it's probably less of an issue today than maybe it was 10 or 13 years ago when I started here. I feel like that's something that is better known by all participants. So everybody should go in with their eyes wide open, right? And understand there's pros and cons, which outweighs the other.
I always say ask plenty of questions. Make sure that you choose your corporate VC or your VC well.
Yep.
Ask questions. So it leads me to one thing which may not be obvious for our audience, which is you and NVCA are very focused on raising the bar, bringing quality training to your members. And that's not an obvious thing to do for a lobby organization. Can you speak to why this matters to do training? And we just had one of our colleagues coming to one of the training and she loved it and it was high quality. So you're not just doing it for the sake of it, you're actually doing really high quality training. So why?
Well, first of all, I think that's part of the role of a trade association to understand what all can we do for the health of the industry. And obviously, public policy is a lot of our focus because it takes so much time and effort to do it well, do it right, and have success. But there are other things that a trade association should be responsible for. And I think of it as what can we do to make sure the industry is the best version of itself? And a little over 5 years ago, we publicly launched what is now known as Venture Forward. And it's basically a 501c3 tax exempt foundation that essentially has taken on the education role. And if you go back decades, there was something, it may still be going on, but NVCA was part of helping set up something called the Venture Capital Institute. And if you talk to people who have been in the industry a long time, they harken back to the days that they went for a week in Atlanta at Emory University. And for reasons that I don't fully understand, because it happened before I was hired here, NVCA wasn't a part of that. And so when we launched the 501c3, there were a lot of things to align with its mission. And one of those was democratizing access to information and education about venture investing. And we started with a program that we call VC University, which really just helps open the aperture for a lot of people to understand what venture investing is about. And that's an online course. And we have a partnership with UC Berkeley Law School, as well as now Stanford Law School and NVCA and Venture Forward. So the four of us operate this. And we've had almost between 5,000 and 6,000 people go through that. And it still has a net promoter score in the 90s. So that's been hugely successful. But what we've come to realize over the last few years is there's a lot more help, education, training. And so we've done a couple of new programs. One that you mentioned, one of your colleagues was able to join us a few weeks ago, and that's a new boot camp. It's like a 4-day boot camp, and this was the first one. It was at Stanford Law School in California. And so far, the feedback we've received from your colleague as well as other participants was very positive. And so I think there's something that we will try to continue to build upon and make it even better. We also were fortunate enough to get a grant from the Ford Foundation to create a master's class. And this was important. If you're a traditional VC, I know that everybody feels like the first fund's the hardest, but the first fund, the second fund, you don't really have a track record.
It makes a lot of sense. Now, when we talk about training, and we discussed it before this podcast, thank you for setting all these trainings and curriculum, because I made a bet on this podcast with Stanford professor Ilya Strebulov, where I think that we may see 10x the number of CVCs in the next 10 years, from 3,000 to 30,000. If that's true, then you do need a lot of what you call check writers, investors, engagement team, and all of that. So I definitively see more opportunities to build more good investors, to allocate capital to early stage companies for them to grow well. So,
well,
yes.
There's actually a great data point and sort of case to look at. Not many years ago in Austin, Texas, there was pretty much one venture capital fund, Austin Ventures. And for entrepreneurs in that region, if they didn't get a check from Austin Ventures and they went somewhere else, the somewhere else would say, well, why didn't AV back you? And they go, well, they already had this competitor or something in their portfolio, and they didn't want to back two companies doing the same thing for whatever reason. But it was the kiss of death to entrepreneurs in Texas because there was one sheriff in town.
Yeah, no competition.
And now you've seen the opposite, right? You've seen people migrate to Austin from California. And now you really see a robust entrepreneurial ecosystem in Austin that's bigger and I would argue better than it was when there was one game in town. And I think that's a great kind of case to make for the importance of a lot of check writers and capital distributed in lots of different hands to be able to support the entrepreneurs.
Now, my next question is going to be about this distribution geographically, because it's an opinion, I'm sure. Do you wish the US to have more distribution in terms of entrepreneurs and VCs across states? Or do you think the US is more competitive because it's so concentrated into very few ecosystems.
I think it would be so much better for the US if it were better distributed. And if it were in different geographies across that, there are entrepreneurs everywhere.
Yep.
But if they're not supported by an ecosystem that can give them those early checks, then we'll never know what they could have done. We'll never know what great innovation they could have made to society. And so I think it's important that we think about what could make other geographies more healthy, even more countries. And so I would like to see it dispersed even more.
Yep. I agree. Entrepreneurs are everywhere, and you need the right ecosystem and support system for them.
And it would certainly make my job easier if we had more constituents for other members of Congress that were in other states that were greater participants in the ecosystem.
Yeah. So I have two more questions. Yep. One is about AI policy. What do you see the AI policy you're seeing today, the implications for venture?
Well, I think we hopefully can get this patchwork quilt of state by state under control, and we can have a clear set of rules, because that's just an overall drag on what AI can fully accomplish. And I think it's important for us to address that. I guess just personally, I'm interested to see the next evolution beyond the large language models. When we get to small language models, when we get to AI serving very specific purposes for very specific reasons that show significant increase in whatever the metric that we want to see increased is. So I'm looking forward to the next phase of what AI can accomplish and do. And I just hope that we can get the policy in the right place so that can happen.
Yeah, I think some of that is edge computing. My last question for you, what do you think matters the most for the next decade?
Well, it's an obvious answer for me to give, which is I think policy matters the most over the next decade, because I've seen how it can really screw things up. And I've seen how, when done right, things can happen. And whether you're trying to get procurement reform so all the new defense and national security type technology can make it into the Pentagon and into the warfighters' hands, whether you're thinking about the amazing innovation that can happen with new drugs or new medical devices, whether you're thinking about the energy needs from AI and whether or not the company that is pushing the envelope over nuclear and bringing that back and being able to support the energy needs of not only the ratepayers and the citizens, but also the increasing needs from the AI infrastructure. Everywhere you look, there's a need for innovation. And in every corner you look, there's a way that public policy can help or hurt. And so I think the most important thing is that we gather the participants in the industry, because we're a small industry, and make sure that we're convened around what needs to happen so that everybody can succeed.
Well, Bobby, I think you made a very good case for thinking about policy early enough so that it can have the right inflection point. Thank you so much for your time today.
Great to be with you. It's always fun to talk, and I appreciate you having me on your show.
Thank you.